Yeah, so OBC over the weekend went into prompt corrective action. Now, they are the latest in a series of banks which have gone into prompt corrective action. I'll get into explaining what that means. But essentially, this prompt corrective action is determined based on a number of parameters: the bad loan level, the level of capital adequacy, return on assets, profitability. So put all of that together, and the RBI then goes and says that a bank needs to be under prompt corrective action. About 7 banks, 7 weak public sector banks, are already under prompt corrective action. A whole host of others may follow. Back in December, and I haven't done the updated numbers, but back in December, there were about 16 that had fallen into the NPA category of prompt corrective action. But it's not that cut and dry, because the RBI tends to put together the level of NPAs, the level of capital adequacy, the return on assets over a period of time, and also profitability. So based on all of that, they make a quantitative and a qualitative judgment before they actually recommend prompt corrective action on a particular bank. Just to give you a sense of what happens when a bank is under prompt corrective action, there are 3 threshold levels. There's a risk level 1, risk level 2, risk level 3. Risk level 3 is the most extreme. So if you're under risk level 3, the corrective actions are more stringent. Under risk level 1, it's quite simple. It's something like you can't pay dividends, etc., which in any case these banks were not doing. So it's a whole host of strictures that are put in place. In the risk level 3, there could be curtailments on branch expansion, on management compensation, and there could be discretionary action by regulators as well. Lending, whether you curb your lending, that is left to the discretion of the management. So they don't actually put curbs on lending, but generally most managements will move towards lower risk lending once they're under prompt corrective action. Closing off the chat, want to leave one thought out there. Now, this has been put in place for a number of banks. Banks we have spoken to since then have said that they continue to lend even though they're under prompt corrective action. And then there is one thought out there that, perhaps this is not strong enough. Perhaps you need to actually do something that restricts the kind of lending that these banks can do. There's an age-old suggestion that had actually come in from Mr. Tarapur, who was the deputy governor a long time, late Mr. Tarapur was the deputy governor a long time back. And that was the concept of narrow banking, and just leaving it out there that perhaps we should consider that. That essentially involves converting these banks into deposit service banks and taking away their lending function entirely. Dramatic suggestion, but it was a suggestion which had been put out by Mr. Tarapur in the previous NPA crisis.
So how do they earn any money?
They earn out of they service deposits, and they wind down their lending book. All additional deposits get parked into government securities. So over a period of time, you de-risk the book, and eventually you wind down the bank.
So then you're only whatever little service charge you get.
You're a payment bank, right? You become a payment bank.
So that's it. Nothing else at all. Wow.
So look, talking about the impact on markets, actually probably there could be some negative impact on OBC share, but one more PSU bank entering into the prompt corrective action, and like Ira mentioned that there is no restriction on lending, but usually you will go slow on lending, or there could be a freeze in the short term, so which means more scope for private sector banks and NBFCs, so it's in a way positive for that segment.